A windfall tax is levied by governments on specific sectors when economic conditions allow those industries to experience significant above-average profits. It is imposed on companies in target industries that have benefited the most from the financial windfall. Nigeria recently introduced a windfall tax on banks as part of its Finance Act amendment. This one-time tax levy targets banks' substantial profit from foreign exchange transactions from 2023. The government aims to utilize these funds for critical infrastructure development, education, healthcare, and public welfare initiatives. Most significantly, the tax rate has also been increased from 50 to 70%, and its application period has been extended to all profits from FX transactions through 2025. Well, let's get to understand this properly. And the Managing Director, Chief Executive Officer of Financial Derivatives Company Limited, with more than 30 years of experience in this field. Mr. Bismarck Rewane, thank you. It's good to have you on Business Nigeria this afternoon. We appreciate this.
Good afternoon, and thank you for having me.
Yes, I think I need to start this way. Since it was announced by government, the windfall tax has elicited divided opinions from Nigerians and, of course, the financial institution operators in that sector. Tell us what this really is about. And is it unique to Nigeria?
Okay, let me first of all start by stating the fact that a windfall tax is an extraordinary item. Extraordinary items in accounting are described as things that are irregular and infrequent. So that is, we are talking about the extraordinary gains as a result of the Naira devaluation, which have actually accrued to the banks in particular. But also you must understand that the flip side of this is that there are extraordinary losses that have also occurred. So to look at it in context, you have to understand what is it that taxes are used for? Taxes are used to finance government activity, creating an environment for people to thrive and make profits. But also, as people make profits, there are also the chance that you make losses. So you have the corporate income tax, which is charged at an average 30% for those who make profits. And those who have losses, you can carry forward the losses as an investment tax credit when you make profits in the future. So now, to understand this fully, I think all Nigerians have to know that the size of this economy is about almost 300 trillion naira, slightly more, maybe. But also, we must understand that the total taxes collected in 2023 came to about 4.9 trillion naira for corporate income tax. That does not include some other taxes, levies, and tariffs that exist. The extraordinary profits for the top 10 quoted companies actually comes to 1.4 trillion. And 1.4 trillion, but also the extraordinary losses for the top 10 quoted companies is actually 1.7. So net foreign exchange translation and transactions resulted in a 300 billion naira loss. So who are the main beneficiaries of the exchange rate gains? Number one beneficiary is GTCO. Number two is EcoBank with 328 billion. GT Bank had 441 billion naira extraordinary profit. Zenith Bank had 288.98 billion naira. And FCMB had 83.96. Stanbic had 25.59. Now, if you flip it to those who made losses, the highest loss was made by MTN, 740 billion naira. First Bank Holding Company had 332 billion naira losses. Nestle had 195 billion naira, essentially wiping up its crude capital. Guinness lost 153 billion. And Stanbic, which is on both sides, lost 45.9 billion, while they gained, they gained 25.9 billion naira. So that is what it is. Now, you can describe this as a Robin Hood economics, where you are robbing the rich to feed the poor. That was many centuries ago that you had the Robin Hood story. So what is it that the government wants to do with the money? The government has some broad macroeconomic goals. One, to increase revenues and to ensure that growth of the economy is at average of 5 to 6%, essentially trying to achieve $1 trillion economy by the year 2028. Secondly, the growth rate must be in excess of the population growth rate. Population now is growing at about 2.4, while the growth rate in the last quarter was 3.1%. To increase the income per capita, one, you could be growing and your income per capita can be declining and income inequality increasing. So the government wants to do that so that the welfare of the people is better than what it was before now. Finally, to reduce multidimensional poverty. And you know that growth is going to be powered by the power sector. So those will be the broad macroeconomic goals. Now, our tax to GDP ratio, and one thing I want to make clear to all viewers out there is you do not fund your development primarily with revenues that you collect. Revenues are to support the activity of government. At times you borrow with what you call revenue anticipation bonds. But growth is a function of two factors. One, government revenue, but more and most importantly, if I may use that word, is the level of investment and optimal use of that capital stock. Investment in Nigeria has been, teetering and more or less declining. When you talk about investment, you talk about foreign portfolio investment, foreign direct investment, domestic capital formation. So that has not been growing so rapidly. And revenue is not a substitute for growth. Please let us know that. So you can increase all the revenue you want, but it's not a substitute for growth. We need revenue, but we must have investment. So Nigeria's tax revenue to GDP ratio is 9.4%. In Ghana, it's 12.3%, and in South Africa, it's 26%, which means that the people are paying taxes to support the government, and the government is expending the revenue efficiently. The problem with Nigeria is that the people do not believe that the revenue that is being collected is being deployed efficiently.
True.
So as long as I don't believe, I'm not incentivized to actually want to pay. The incentive to pay taxes is reduced because they do not believe that the taxes are being used efficiently. And in some cases, they actually believe that the taxes are being stolen. So that's one thing we have to do. So I think at that point, I must let you know that. So what to do? The windfall tax is not a Nigeria-specific issue. We've seen it in most European countries. Most European countries have seen it happen. If I may digress, in the United Kingdom, we had a 35% windfall tax between 2022 and 2028 on the oil and gas companies because those guys were prospecting in the North Sea. They polluted the environment, and the proceeds were used, one, to ensure compliance with the ESG goals, environmental friendly, and a relief package to alleviate UK cost of living crisis. In Portugal, which was a part of the European Union, they had a 33% windfall tax on energy companies and food retailers to reduce inflation and boost renewable energy investment. Czech Republic was as high as 60%, and that was used to subsidize energy costs and support social assistance programs. In Germany, which is the highest, Germany had a 90% tax because they were closest. They suffered severely from the Russia-Ukraine war, and then the oil companies were selling gas at a higher rate, and they used this gas proceeds to actually put a brake on energy tariffs and supported people. Italy was 40%. So the concept of windfall taxes when they're extraordinary items is not confined to Nigeria. It's not Nigeria specific. It's a universal concept. But the point is that if you look at, you can transfer the tax gains to the tax losses. But the Robin Hood theory is that you are taxing the rich to subsidize the poor. But these are not, the people losing and gaining are not rich, and neither are they poor. The real shareholders are hundreds of thousands of shareholders in the Nigerian market. And so if we say the net foreign exchange position is a 300 billion naira loss, then we have more losers. The amount of losses are more than the amount of gains. I don't know if I have addressed the issues.
Very well in depth. And the report also shows that Nigeria needs about $100 billion or about 150 annually for the next 30 years to be able to close infrastructure deficit. So if we are to get that money, we definitely must get it from somewhere and not from revenue like you identified. But let's look at this out. Is there any profit threshold to attain that will qualify a business or economic sector for windfall tax?
No, let us say something. First and foremost, we have an economic society. That is, what I mean is that Nigeria, let's take Nigerian economy as a whole. And therefore, we have the broad economic goals which are just listed out, if those things are achieved, theoretically, everybody should be better off. That is, you'll be happier in 2024 than you were in 2023, happier in 2023 than you were in 2022, and so on and so forth. And so we look forward. So there have been a lot of acrimony about these taxes. The first argument is that the FX taxes of gains of today will become FX losses of tomorrow. But the banks are holding assets on behalf of their clients. They've made foreign currency loans to oil companies. If those oil companies do not perform and they have to write off, they'll be writing off huge foreign exchange exposures. Translated into Naira will have massive foreign exchange losses. So should they preserve those profits and to use it as a buffer against the losses that may come in the future? One. Two, what are the options? Since the government has a role to play, the government cannot be oblivious of the fact that some people are making a lot of money and they need to redistribute wealth. Okay, so if that is the case, how can we make this more efficient so that it becomes a win-win? The government wins, the people win, and the taxpayer also wins, the taxpayer being the corporate entity that made the extraordinary profits. We believe that, one, the tax rate of 70% penalty is a bit high. If you compare, apart from Germany, I don't think there's any other country that had as much as 70%, right? So Czech Republic was 60%, all the others were 33, and 40. So if you brought ours to 50, it will achieve the same purpose. That's one. Two, we had project for tax swaps. It worked. The road between Bagada and Tinkan Island onto the airport, concrete slab road built by the Dangote group. You can see it, it's clear. Let us assume that Dangote paid that tax to the government. The government awarded the contract. The contract was, the Parliament or National Assembly went on oversight and stopped it. Then part of the money was stolen. Somebody, all sorts of things could have happened. Today, everybody that drives on that road does not care what tax Dangote used to convert the road, but everybody enjoys that road. If you go on the Onitsha and Enugu road, which the MTN is funded, you can see that. So one is that you can ask the taxpayer to swap some of those taxes to projects which are part of the social good, right, of the people. So affordable housing, bridges, roads, maybe power stations. If you can do that, so let us say you rehabilitate a power station and channel it directly to a particular society, to an industrial park. The Nigerian people will feel it. The government will reap the benefits of the political and economic capital, and the assets, right? So assets provide an impetus for growth. I think that is clear. That's one option. The other option is to say, look, in that case, the asset belongs to the government, but it is funded from the profits of the taxpayer. But the most interesting alternative is to have the asset belong to the taxpayer, in which case the taxpayer builds an estate or builds a road, maintains a road. It is an appropriation of dividend rather than a payment out to the government. So that road is there, and it's leased out or told, but the people benefit from it. The asset is on the books of the taxpayer. So the taxpayer, rather than declare dividends for people to go and spend on bits and pieces, will have that road, and the balance sheet does not diminish in any value. So those are ways of actually sweetening up, because you have to incentivize taxpayers. So that's why the title of this presentation at the beginning was Windfall Tax, Incentive or Penalty, right? The whole idea is that after you have paid these taxes, is your company better off? Is your society better off? Is the government better off? I think that is key. The other thing is that all taxes are subject to the 4 canons of taxation as espoused by one of the leading thinkers, Adam Smith. Those canons are simple. A tax must generate revenue. A tax must generate revenue, number one. Number two, a tax must be easy to administer. So this windfall tax is very easy to administer. I just apply a figure. 3, it must be neutral, right? That it must not dislocate the allocation of resources, right? And 4, it must be equitable. In other words, the rich should pay more than the poor. So it falls back to, again, the Robin Hood philosophy of taxing the rich to pay the poor. But at the same time, you don't want to disincentivize the rich, because unlike in Robin Hood days, the rich can actually invest their money elsewhere. And that would be disincentive and be detrimental to the economy that we have. So I don't know if I've addressed this, but 1, the fact that the windfall tax is not Nigeria specific. Windfall tax is what we call an extraordinary item, which is infrequent and irregular for accounting purposes. 3, that the penal rate should not be that high, or if it becomes a disincentive. And 4, that you have ways and means and structures that can either keep it as an asset of the government, 2, have it as a joint venture where the government's stake is an investment and your stake is an investment and it stays there. Or 3, eventually you have it as an appropriation of the profits that are made, rather than declare cash dividend. You actually use it to invest in an asset which is part of the social good of society.
Now, many reports have also indicated that government may realize about 6.2 trillion from this windfall tax. But for me, I'd like to ask you again, can you give us a detailed explanation of how monies like this can be redirected into the economy?
No, but anyway, the thing is that in the economy, there are 4 elements that constitute your GDP. 1 is government expenditure.
Yep.
2 is investments. 3 is consumer income, that's aggregate consumption. And 4 is net exports. The government activity is funded by taxes and other forms of revenue, levies, rates, and all sorts of things. The higher the tax revenue, the greater the ability of the government to fund its goals and its activities. So yes, the corporates have made income. They normally will pay 30% tax, but you're saying, oh, well, you made this extraordinary item. Therefore, we are giving you a penal rate of 70%. We think that's too high. Maybe you come down to 50%. Now, not only that, we want you to have a say in how the tax is spent. So we want to swap, rather than pay us cash tax, we give you a road to build, right? And that road is ours, right? But you build it and people will see it and we get political capital out of it. You get economic capital and everybody sees it, becomes part of your social responsibility, so to speak. 3 is that, no, we're not going to take it from you. You would have an asset which can benefit the people, and the asset will be on your books. So your total assets and your earnings will not decline. It's an appropriation of your dividend. Rather than give dividends to people, you are building houses with it, and the houses are being sold out, affordable housing. So finally, you would come up with the concept of a joint venture where the government has part of it, the private taxpayer has part of it. So in all of these models that I've enumerated, everybody gains what we call a win-win situation. But you see, one fundamental condition for these things to succeed is that when the government says something, people should believe it. When the people declare their taxes, they should be accurate and have integrity. That way, what we have today, which is a trust deficit, will actually minimize, and therefore you carry the people along with you because they believe what you say and that they can feel it. What they see, what they hear, and what they feel will be the same thing.
So before I let you go, many will say there should have been at least a period of maybe technical consultation before this was instituted. I don't know if that was done. And also, it's the banking sector today. What other sector might be next after this?
Your question, if I understand it right, is you want to know what sector will have the greatest impact?
Yes.
Okay, so there are many sectors, and the growth numbers came out yesterday. Even though we got 3.1%, there was a nominal, there was an increase in GDP growth compared to second quarter of last year.
Yeah.
But the 46 business activities that were monitored, only 10, that is about 21% of them expanded. The other 79% also either contracted or slowed. If that trend continues, it means that in the third quarter and fourth quarter, we are going to see a sharp dip in growth, and that will be a warning signal. And if you decompose the growth, you'll find that 10.5% of it came from oil and gas. But if you go into the oil and gas sector, you'll find that most of the bulk of the growth was in the gas sector. Do these areas, when you talk about gas in Nigeria, which is now the fastest growing, and then you had the financial services also, these sectors do not employ that many people. Sectors that employ people, manufacturing really slowed, agriculture slowed, road transportation fell, air transportation fell, rail transportation increased, but it's not that much, not a big deal on the rail side. So the sectors that employ people actually contracted and slowed down, while the sectors that didn't employ people, because of its nominal value, actually increased. And services sector, which does not employ that many people, also show the same sign. So what it tells me is that there is a rapid or a very important necessity at this point is to ramp up investment in gross capital to make sure that capital formation increases, that the optimal use of that capital to create jobs, and also to distribute income and opportunities across the nation, because we have a multidimensional poverty problem, we have a debt problem, and we also have a power supply problem. So these are the things that we are looking at, and I think that way there will be some, hopefully there will be some improvement. So we have a moral and social responsibility to pay our taxes, but that moral and social responsibility does not include, right, exploitation. So it's tax levels get to a particular place where it is extortionary. We don't want that to happen, right? But the greatest incentive for people to pay taxes, people can see that the taxes they have paid has turned into material benefits for them. They can see the roads, they can feel the power supply, they can see the water, and they can, what I mean is the social good. So that's the litmus test for one, getting people to pay tax. Because what you do not want is a demoralized taxpayer who is looking for every opportunity not to pay taxes because he does not believe that the taxes he paid before has been used prudently. He does not believe that the taxes he's going to pay tomorrow is going to be used diligently. And he's better off taking the law into his own hands than allowing the law enforcement to take care of him. I think that's my understanding.
I must thank you so much for your time. It's been nice having you, Mr. Bismarck Rewane. He is the Managing Director, Chief Executive Officer of Financial Derivatives Company Limited. Thank you for joining Business Nigeria. We appreciate this.
Thank you for having me.
All right, there, coming up next.